Ethereum has been doing very, very well this year, and all of the metrics and statistics surrounding Ethereum show that it's not actually really that overvalued. Instead, Ethereum seems to be trading around its fair value, and I am very, very impressed with a lot of the statistics coming out from the Ethereum and DeFi in general. Of course, if you enjoy the video, remember to like and subscribe to the channel. Also, remember, nothing in this video is financial advice, and you should always do your own research. So, in today's video, I'm going to go through a few key stats that I like to look at to see how Ethereum is doing in general. The first stat is the percentage of supply in profit. So right now, 75% of Ethereum holders are in profit, which is still very good. And all this shows is a lot of people probably won't sell, as they still think they're way up and they may as well hold as it has been a good investment. Another key statistic is the average transaction fees on the Ethereum network. Right now, Ethereum's transaction fees have never been lower. They're sitting at around $5 from all-time highs of $40. So if you want to use decentralized finance or make transactions on the Ethereum network, now is a good time to do it. The reason I'm showing this metric is it's actually very useful when looking at a lot of the other metrics we're about to look at. So, let's get into some of the more important metrics. One amazing metric that I've been looking at a lot is the percentage of Ethereum supply in smart contracts. Right now, 22.5% of Ethereum's total supply is locked up in smart contracts. This is basically at all-time high territory. In 2016, there was about 22.5% in smart contracts again. However, this was a lot lower amount, and this was for a massive DAO event. This was basically for an anomaly event, and this represented $233 million worth of Ethereum. Right now, $63 billion of Ethereum is locked up in smart contracts. All this means is people are using DeFi and people are using smart contracts on the Ethereum ecosystem. As a result, this shows Ethereum is being used tons and tons, and this helps justify its total value. If, say, only 1% of Ethereum's total supply was in smart contracts, this would represent that many people are using Ethereum to speculate. They're just buying it and selling it later to speculate. However, since it's in smart contracts, it represents people are actually getting utility from Ethereum and actually using the smart contracts that Ethereum has to offer, which is very, very good. So, let's take a look at some of Ethereum's valuation metrics. There's multiple ways that Ethereum is valued. Basically, Ethereum accrues value over time because people need to use and buy Ethereum to generate smart contracts. However, Ethereum also gets value because of protocol-generated revenue. Whenever smart contracts are used or DeFi applications are used, a fee is generated, and this fee is redistributed back to the holders. Ethereum's price to sales ratio shows the market cap of Ethereum and the protocol generated revenue. So, right now the price to sales ratio is sitting at around 60, and this is relatively high for this year. However, we know the reason for this is because the fees have dropped off significantly for Ethereum. Traditionally, Ethereum's been sitting at around a 40 price to sales ratio, which is pretty low when you look at the long-term picture. As you can see, back in 2016 and 2017, Ethereum's price to sales ratio was 18,000. This is way higher and it's completely flattened off. All this means is people are using DeFi way more than they were back then. Back in 2016 and 2017, no one was really using DeFi, they were just buying and holding. As such, the price to sales ratio went way up. However, now there's tons of revenue generated from DeFi protocols and the price to sales ratio is way down. All this does is it represents that Ethereum is currently justifying its valuation. Ethereum isn't looking too overvalued right now, and it appears to be trading at a pretty good value, and historically it appears quite undervalued. So, another great metric to look at is the total value locked up. This is when people lock up their Ethereum or lock up their DeFi tokens and they stake those tokens. This is a good metric as generally these people can't immediately unlock these tokens. It takes a certain amount of time. As a direct result, this means the price usually can't just instantly crash as people have tokens locked up in the ecosystem. As we can see, the total value locked up in DeFi on the Ethereum ecosystem is around $50 billion. This is value locked up in protocols like Aave, Compound, Maker, Bancor, Curve, and these are a bunch of DeFi protocols on Ethereum that all have their own use cases. This shows heaps of people are using the Ethereum ecosystem and corroborates a lot of the statistics that I was looking at beforehand. If we take a look at the ETH in ETH2 deposit contract, there is tons of value locked. Currently around 5.5 million Ethereum are locked up in the Ethereum 2.0 smart contract. This is around $10 billion worth of Ethereum. So, you can't stake your Ethereum on the normal Ethereum as it is a proof of work consensus mechanism. However, Ethereum is moving to proof of stake, and right now you can stake it on the Ethereum 2.0 smart contract. So, it's pretty clear that tons and tons of people are staking their Ethereum right now. It has just gone up in a straight line ever since October, and there's $10 billion staked in Ethereum 2.0. Ethereum recently had a crash from $4,400 all the way down to $2,600. However, despite this, all of the smart money held their Ethereum and they kept staking it over time. Generally, we'd see a reduction in the amount of people staking their Ethereum if Ethereum was over and no one believed it. However, more people believe Ethereum 2.0 will launch very well and they're staking their Ethereum in anticipation of that. So, right now, the total value locked in decentralized finance and Ethereum has never ever been higher. It is extremely high right now, and this shows a lot of people believe in DeFi and they believe in Ethereum, and this should reduce volatility for cryptocurrency in general. Also, I want to take a look at a few decentralized finance metrics that show more people are using the Ethereum ecosystem than ever. So, the total DeFi users over time has been growing at an exponential rate. As we can see, there are about 2.5 million DeFi users. However, back in 2019, there were only under 100,000 DeFi users, and we can see it's kept growing exponentially. Back in 2017, there were effectively no DeFi users. The reason for this was because nothing was built on top of Ethereum. Ethereum wasn't really that established yet, and a lot of people were speculating on Ethereum's price. However, DeFi users has kept going up, and more people are using the DeFi ecosystem on Ethereum. Most of the decentralized finance things that are on Ethereum were actually built in 2019, and as we can see, Ethereum looks more and more established than ever. In fairness, the majority of these users are using Uniswap. What Uniswap is Uniswap is a decentralized exchange. So the majority of users are using DeFi to buy and sell cryptocurrencies. However, despite this, there are still at least 1 million DeFi users that are using lending and loaning on Aave, lending and loaning on Compound, Polygon's features, QuickSwap, and all of these other DeFi features. So there are tons of people who are using DeFi for things other than just trading cryptocurrency, and I do expect this number to continue to grow exponentially. As a direct result, cumulative DeFi revenue has continued to go up, and it's already gotten over $1.5 billion in revenue made by the decentralized finance world, and this is a pretty big number. So everything is looking very good for the Ethereum ecosystem. So the point of today's video was to show you that Ethereum is very well established right now. Back in 2017, nearly nobody was actually using decentralized finance. This is the myriad of applications that are built on top of Ethereum, and nobody was really using smart contracts on Ethereum network. However, today, in 2021, there is tons of use on the Ethereum network. People are using DeFi applications like Aave, Compound, Maker, and more, and this is shown in the numbers. Tons and tons of people are using DeFi, tons of people have their Ethereum locked up in smart contracts, and right now there is a lot of utility and use case for the Ethereum network. It's generating a lot of money in protocol revenue, and this shows it's experiencing record users and record use. I do believe this is going to grow over time as the utility for Ethereum gets even greater. Back in 2017, there was no utility for Ethereum. However, in 2020 and 2021, the utility in Ethereum just went up and up. I believe this will get bigger and bigger over time, and this should cause Ethereum's price to appreciate in a more consistent and predictable pattern. So everything looks bullish for Ethereum. It doesn't look that overvalued. Back in 2017, it was very clear that Ethereum was very, very overvalued. However, right now, it really doesn't look overvalued. A lot of people think that a $300 billion market cap is very overvalued for Ethereum. However, I completely disagree, and I do believe that its use is justifying this market cap right now. And I do believe when it gets more and more use, the market cap will just go up and up, and Ethereum is going to be one of the biggest players in the decentralized finance space. Of course, if you enjoyed the video, remember to like and subscribe to the channel. Also, remember nothing in this video is financial advice, and you should do your own research into valuing Ethereum and tell me in the comments below what you think of Ethereum. Thanks for watching the video.